Hi, welcome back to the live stream. So that was a fascinating insight from Brian. I'd like to thank him for his thoughts. Listen, I was listening to the pre-recording as well, and actually, I think some of the things he said were quite fascinating and provide an ideal springboard for the next discussion. So once again, many thanks to Brian for his input. Next panel is up and ready, I think, to go. Entitled David and Goliath, Is Innovation the Name of the Game? First of all, just like to thank JP Morgan for sponsoring this particular session. And I'm going to hand over in a moment, momentarily, to Matt McDermott, who is the Global Head of Digital Assets at Goldman Sachs, to lead the discussion and take you through what I think will be a fascinating hour or so on how the digital agenda is playing out, particularly in our world. So thank you, Matt, over to you.
Thank you, Andy, and thank you for having us. An hour or so seems an awful long time. But so yeah, welcome to the David and Goliath, Is Innovation the Name of the Game? I mean, perhaps unsurprisingly from my perspective, I definitely believe that it is. Having spent a lot of time now immersing myself into my new job as Global Head of Digital Assets at Goldman Sachs, I've kind of spoken to all corners, of the institutional marketplace around crypto and digital assets. And the one thing that fascinates me is just the volume of people that are investing time and resources into looking at the underlying technology and seeing how that can have a potentially profound impact in transforming their businesses. It's still very, very early days, but I think that the volume of capital we see into this space really does point, in terms of direction of travel. And I would say furthermore, we've seen numerous surveys also kind of looking to call people's views kind of in terms of where they see, the technology kind of progressing to, and they certainly corroborate that. For today's discussion, I have a wonderful panel from all corners of the globe, as you'll see. So very early for a number of them, but they obviously all share different perspectives. So firstly, let me have each panel member kind of introduce themselves and just a very brief summary of their perspective of where they sit within the digital kind of world, and then we'll progress to some questions. So I will start with Nadine, as I see you on my right-hand side.
Good morning. Good morning, Matthew. Thank you. My name is Nadine Chakar, and I run the newly established digital division at State Street. And our mandate is really to build the digital bank of tomorrow that definitely includes a lot of the global markets activities that we're going to talk about this morning. So I'm delighted to be with part of this panel this morning. Thank you.
Alyssa?
Yeah, hi, good morning all, and thank you, Matt. First of all, thank you very much to Isla for the invitation to join today's panel. So my name is Elisa Poutanen, and I work as a sales lead at HQLAX. I joined HQLAX earlier this year after having spent a number of years at Deutsche Börse Group and BNP Paribas in various client-facing and sales positions in securities finance. I'm very happy to be here today, obviously, to join this great panel and give insights to what we do at HQLAX and how we plan to transform, from our perspective, the securities finance market.
Shane?
Hi, my name is Shane Martin. Firstly, thank you for having me on the panel today, and thank you for my friends at ISLA for inviting me. As I said, my name is Shane Martin. I am head of securities finance sales at WeMatch. I joined WeMatch in February this year after 23 years in the equity finance industry, previously at Deutsche Bank and JP Morgan. Excited about today's panel about where innovation, technology and digital assets are looking to transform our marketplace. So looking forward to a really good discussion.
Yeah, and that's a really good point. So, I mean, yes, there's going to be, naturally, from my perspective, a bit of a large emphasis on digital assets, but obviously innovation is slightly broader than that. So, very good point. Boaz?
Thanks, Matt, and thanks, Isla, for having us as well. And good morning, everybody. My name is Boaz Yaari, and I'm the founder and CEO of ShareGain. And ShareGain has created the first securities lending digital agent, trying to drive wider adoption in the securities lending market through introducing new participant to this market, and I'm sure we're going to talk about it in the panel. And it's going to be an exciting hour.
Last but not least, Matt?
Great to be here with everyone. Matt Boyd. I look after prime finance for Coinbase. It's a fairly new business for us. And we're getting into really like a prime brokerage and agency lending business in the crypto space. So really excited to spend time with lots of people I know and others that I'm meeting for the first time.
Fantastic. Thank you, everyone. So I guess, with ESG, digital assets is most certainly probably the hottest topic at the moment across the financial markets. I don't think you can pretty much go into any meeting without discussing it. As we all know, DLT, is not a new concept. It's been around for many years. So I guess, one of the questions I have for each panelist is, why do you think there is a sudden kind of flood of enthusiasm for DLT? And do we think that this is real and sustainable? So I'll start with Nadine, given the new job.
I would say yes. I mean, everything takes time, right? Like when I was just giving it some thought, right? We had about 30 years between the time that ARPANET came online and the time we saw Amazon. So these new technologies do take time, and I think most importantly, it's really finding these apps that brings this technology to life, and we're seeing it happen right now. I think for full institutional adoption, though, it's going to take us a little bit more time. We need a bit of scalability and resiliency, and most importantly, a good regulatory framework. But I do believe it's here to stay, and it has all the promises of totally reimagining the way we work, the way we act, and the way we administer our industry. So at least from a State Street perspective, we're all in and looking to work with everybody to create an ecosystem for the financial markets. It's going to be really exciting.
Fantastic, thank you. Alyssa,
Yeah, sure. So from our perspective, I think that we've seen some more capacity lately from banks to look at new technology and initiatives, as some of the large regulatory-driven projects that had used much of the financial institutions' capacity in the last years have now somewhat been completed. And as you mentioned, Matt, in your introduction, I think that the creation of digital asset teams within our client organizations and the fact that they're very closely connected to the business, it helps really to define real business and use cases that are relevant to the business, bring tangible value to the desks, whilst also contributing to specific new technology roadmaps and targets within those organizations. And in terms of whether the enthusiasm is real, it is true that implementing innovative technology solutions is quite hard work. It requires strong collaboration and broad consensus building, but that hard work really pays off. And today, we at HQLX, we're live with multiple banks on our platform, and our onboarding pipeline is strong. And I think that we are also working on a number of new use cases, building on our existing service range. And one example of such real use case is the work that we're doing with a couple of the leading agent lenders to connect and bring new liquidity onto our platform. And that really means to us that the enthusiasm that we see turns into live transactions and more participants on our platform. So yeah, for us, the answer is yes. The enthusiasm is very real.
And I think that's a really good point. And I think that actually the broadening and increasing the marketplace is actually, from a commercial perspective, hugely important. Matt, I guess you have a slightly different kind of perspective on this from your new seat. But interested to hear your thoughts.
Yeah, I think that there's really two aspects driving this in my mind. There's if you think about broadly DLT, like the distributed ledger technology, blockchain infrastructure. And I kind of learned this in the last firm that I was at before Coinbase, which is learning about what is blockchain, what does that mean, what is the utility of this technology. And that's really about a shared database experience, and a shared database experience that has kind of I'm using this in an abstract fashion, but a shared database experience that sort of creates efficiency in markets that we've traditionally had hundreds, thousands of operational people dealing with reconciling and addressing inefficiencies in voice-oriented communication or messaging-oriented communication historically. And so that was really like kind of my introduction in this space. In terms of like other aspects that are driving it, though, there's a real new economic aspect that's driving this, and that's the realized volumes and volatility in crypto assets. And so as you've seen, equity markets and crypto markets broadly, fixed income markets, trading in like a very like range bound base, but like going up outside of recent times in kind of like a coordinated fashion. Finding asset classes with volatility is how asset managers differentiate themselves. And there has been volume and volatility that exists in the crypto space that's created real economic opportunity to create returns for money managers. And so that's kind of a different push than the operational efficiency push of blockchain. There are other aspects that we've talked about a little bit in the past and in prep for our panel, which are sort of like efficiency aspects of how blockchain functionality works right now. And I think we'll get into that more in the panel. But there are certainly barriers to entry in this space. There's certainly like speed bumps in terms of how the digital asset space functions. But I think both the fact that the creation of opportunity from an operational perspective, operational efficiency, when everyone's being forced to do more with less, is a really big carrot. And the opportunity to make money for real asset managers is a huge carrot in a place with like zero yield, in a zero yield environment.
Yeah, very insightful. Thanks, Matt. Shane, probably a slightly different perspective.
Yeah, well, I think from a WeMatch perspective, firstly, we are a multi-asset platform. So from our perspective, we are engaged within the digital asset transformation. We are looking at it slightly differently. We're looking at it from primarily a custody angle, and to see from a security perspective how that is looking from a market perspective. So we are engaged from our perspective in that. I think.
Yeah, I think we might have just lost Shane. So while we reconnect, Boaz, do you want to kind of share your thoughts?
Yeah, listen, hopefully you don't lose me as well, right? The gods of crypto said their word. From a Shane perspective, and we'd like to look at these things in a much broader angle. Here you go, Shane is back. Basically, from our point of view, we think that the future is very clear, and there are a couple of big milestones ahead especially in terms of distributed ledgers. But we think that the biggest, if you look at it from a very narrow perspective of a securities finance, then when settlements go real time on a distributed ledger, settlements of securities, that will be, and probably with 3 to 5 years away until there's a standard in the industry between different custodians, that will be a redefining moment for the entire custody network, right? What do custodians like State Street, like BNY Mellon, like JP Morgan, what is their new role in this new life, right? How does it look like? And we think that will create just a new paradigm and a new world for capital markets as a whole, and especially for securities finance, because we know one of the biggest issues is obviously settlements and real time and all of that. And from the crypto space specifically, I agree totally with what Matt said. But from our perspective, again, we think crypto lending is currently at its infancy. Right, it's a couple of corporates, retail, but it's not really has gone mainstream. And we think that when crypto lending, again, like any other collateralized transaction, when it goes mainstream, there's huge opportunities there, and we're definitely working on that, and we will be there.
Shane, thank you. Shane, do we have you or not? Looks like he's frozen. Yeah. Okay, so. And this is kind of, and I mean, just in terms of echoing my own kind of views on that, I mean, I kind of share, I think, what all the panelists say. I mean, I certainly see, this technology, kind of starting to have a material impact in the way we look at securities finance, and the benefits, perhaps that, in terms of the technology kind of weren't there 3 or 4 years ago. It's very evident that there are a number of different initiatives, HQLX, obviously a key one, where you're starting to see the market coalesce around those. And and you can really see, the kind of risk profile change in the improvement in liquidity, and actually the commercial opportunities that are themselves. So I think that, I think that's very positive. I guess the next question, which is a little bit of a continuum of that, I mean, and we can think more broadly across the technology space. Do we think the securities finance kind of model is going to change? And that can be a function of the impact of any different technology. But do we think we're kind of on the cusp of seeing something kind of quite fundamental? And I guess here thinking there's a lot of talk about democratization, the ability to fractionalize with DLT. Is that going to have an impact? And Boaz, I'll start with you.
Yeah. So from our point of view, we think definitely yes. We think we're on the cusp of a big change, a tectonic shift, if you call. And I don't want to, use big words, but we think we're on the cusp of a tectonic shift in securities finance as a whole. We think that at the end of the day, the three main drivers. One is what we call a private investor participation in capital markets. We've seen that huge trend coming in from neo brokers and private banks. Retail is now becoming retail or private clients are now becoming a big force, a driving force, and in capital markets, and sooner rather than later, you'll see all of these neo facilitators, neo banks, neo brokers, private banks coming in and wanting to monetize those assets through the securities finance. So you're going to have a totally new pool of liquidity coming into the market, and that pool of liquidity is different, right? Because it looks at it needs to address eventually retail clients. How do you create better user experience? How do you create explanation? How do you get a frictionless pass through? And all of that process needs to be technology led. And also we think that securities finance, as we know today, will in a few years' time will add crypto as well. So you'll have a total another asset class coming into fruition in terms of securities finance. And lastly, as a whole, the industry has been very much in the last decade, but we've been focused on regulation, right? Regulation, and ticking all the boxes and making a bit more operationally easy or dealing with the back end. We think that we're now where you're looking at broadening the use case and getting more aggressive in how do you increase the market as a whole. And with that happens, we think, again, this is, as we said, securities finance as we know it today, as we knew it back then, will change.
Shane, I'll take advantage of you being here. And it's pretty
Thanks.
Coming on. So, we lost you a little bit on the previous question, but we're just talking about the securities finance model, and just given all the innovation we see across the technology stack, do you think it's on the cusp of material change?
Yeah, absolutely. I think that material change has nearly even started already. I think if you listen to some of the panel sessions or listen to the market or certainly yesterday, your colleague Jojo, for example, was talking about the amount of regulation that she's facing from LCR, NSFR, SRD2, the list goes on and on. So the dynamic in the market has completely changed based on what the individual desks, institutions are facing. My opinion is that the technology hasn't evolved quick enough in our space to allow customers to transact in the most efficient manner. And what WeMatch is doing currently is building optimization tools, liquidity tools, negotiation protocols to allow our customers and our partners to trade, optimize, and lifecycle manage their liquidity in the most efficient manner possible. So I think it's definitely started already. It's got a long way to go. But I think that's the dynamic of where the market needs to move forward, because we have to do less with more, and there is more pressure on different types of, whether it's RWA, whether it's SFTR, whether it's CSDR, all these types of regs that are coming and in flight are really going to dynamically change how we transact, and technology has to evolve to help solve those gaps that currently exist in the marketplace, and that is where WeMatch is currently evolving.
Thank you, Shane. Nadine?
I agree, Matt. Technology is definitely going to totally, turn this industry upside down. The promise of new technologies, and not just DLT, but the whole toolkit, right? When you look at smart contracts, you look at, again, some of the tokenization impacts. it will help us get more transparency, better governance, being able to do things better, faster, cheaper, for lack of a better term. I think also the promise of being able to, and I think just echo what Boaz and Martin said, to simplify the workflow and encourage others to participate. I think that would be massive. But it is going to take time for the reasons that you've stated. We are, to a certain extent, distracted a little bit with a lot of the regulatory changes that we continue to spend a great amount of our time trying to implement, and we have to do it in multiple jurisdictions, not just in one. But I do believe that we will see a more streamlined and a more inclusive programs, if you will, emerge, more new liquidity sources as well. And Boaz, just one thing, yes, our business models will change, but I assure you, we are here to stay. A lot of people have written off our industry before, but we're not going anywhere. So we're here to prove elephants can dance, and I think custodians will continue to be big providers of inventory. We'll compete aggressively in the crypto space, but it will take a while. But we will get there, and I think we will modernize the industry as we get there as well.
And actually, that's an interesting segue to Alyssa, because I think, as I look at HQLAX, I think one of the stark things from my perspective is the number of custodians who are actively involved in that, kind of involved in the platform. And I guess to Boaz's point, I do see, kind of digitization of collateral, be it, the native issuance or the tokenization of real assets, having a profound impact on the way custodians ultimately will kind of, manage their own business. And as you think forward, how that will impact also tri-party. So Alyssa, I mean, interested in your thoughts on, I guess, that, and also, your thoughts are just on the securities finance model from what you see in your conversations or here.
Yeah, absolutely. Thank you, Matt. So yes, well, we do strongly believe that the benefits of DLT applied to the existing securities finance ecosystem will be a game changer. As you noted, Matt, we are connected, and we're very proud to be connected to 6 of the leading tri-party agents and custodians on the market. So our model is really a collaborative one. And I think that we share the view that, that collaboration is key for our customers to be able to easily access and benefit from the new technology that we offer. And one of the key changes that I think that we're trying to, or challenge that we're trying to solve for, has been really for the market to find solutions to the siloed approach in terms of collateral management. And how we go about that is, by using the DLT technology on the basis our operating model is working on. We allow for simultaneous exchange of transactions on our digital collateral record. And we reduce settlement friction to its minimum because we are not moving the securities in our operating model from their initial custody locations. So this will, in the end, result in greater collateral mobility and optimization potential to our customers. And I think that another, game-changing use case that we have been talking to our customers a lot about lately is to use our operating model to help customers to tap into assets that have previously been hard to fund. Due to local market rules and regulations, those assets have been trapped and not been entering the securities finance markets as such. And through the HQLX operating model, we can allow those assets to stay put in their actual custody locations, while still reaping the benefits of the delivery versus delivery mechanism to exchange ownership of those assets, and therefore making them a real part of a wider asset pool that's available for our customers. So there again, I think that the collaborative model that we have with the already existing tri-party agents and custodians and the future ones is really key for us.
Yeah. That's interesting, because one of the things I certainly see, from my vantage point, is just that the ability to actually kind of introduce new assets, new asset classes into the kind of securities finance model, and they could be domestically held assets, or even crypto, for example. So, yeah, as I then neatly segue into Matt, I mean, you having sat on both sides, I mean, how do you see securities finance from your perspective, and particularly, and I know you touched on this just previously, but particularly thinking about as we see the crypto marketplace also kind of grow?
Yeah, one of the things that I spend a lot of time thinking about these days and spend a lot of time with our like risk officers talking about is really how digital assets enable like a real-time risk modeling thing. And if you've gone to any, risk conference historically, everyone's like, we can't wait to get to intraday risk modeling. And I kind of remember this very distinct moment back in 2008 when Volkswagen spiked like this crazy amount, and we had all this Volkswagen on loan back in my like BGI days. This is even pre-BlackRock. Um, and we're doing all these collateral calls, and people are like, but the market's moved already, like using yesterday's close, what are we going to do here? And just the efficiency of pricing and the ability to manage risk, and both from a counterparty perspective as well as from an asset perspective in more real time, is such an advancement relative to the kind of historic close oriented systems that we've had, historically. And if you start to really think about integrating that into some of the offerings that we're discussing with ShareGain, HQLAX, WeMatch, et cetera, and you start thinking about how do you mobilize assets, enabling that sort of real-time monitoring and viewability is really critical in that space. And so I think that's like a really neat thing that's maybe underappreciated, and both increases, again, kind of like I always go back to capital efficiency and operational efficiency in this whole space. That's like a lot of what securities finance does, a lot of what digital asset financing does. And it really kind of like pushes us forward in a really meaningful way.
That's great. And I think just touching on intraday, and for those that are sending questions in, please keep them coming. One of the questions that's come through is the development of intraday repo slash funding fully dependent upon DLT. So I'll kind of weave it into what Matt was saying about how that's going to have a profound impact on kind of credit market risk and some of the other risks that we all experience. And so, Nadine, from your perspective, do you see DLT as the enabler or the only enabler for kind of the intraday kind of efficiencies that we're talking about?
I see it as an enabler, and we may be mixing a lot of things together, but the component for us that's really going to make the difference is the tokenization process, which obviously would use DLT as one of the rails. And intraday is really important, Matt, as you know, for banks like ours. Our ability to reduce risk and credit exposure is critical. So I forget who said that earlier, but when you couple that with real-time settlement, the ability to increase the velocity of collateral, and we're getting it across the board, all our big investment managers, all our large counterparty banks, they're all pushing, if you will, for more intraday settlements liquidity to manage the capital impact. So I see. I know everybody's enamored with DLT. I view that as the highway. We need to put the rails on it. The carts on it, and that's why we're really doubling down on our tokenization efforts and launching these proof of concepts to prove that velocity of collateral is where it's all about. But it's only going to work as much as we can get people to adapt it and increase the network effect that goes with it. So we're very hopeful that that's the path to better intraday management.
Yeah, I think that's a really good point, and I think the network effect here, and it's certainly one of the few markets I've been involved in where actually everyone is kind of working collaboratively together to actually push forward the market, recognizing that is ultimately how you benefit, more broadly. There's a question that's come in, which I think kind of touches on that a little bit, actually. Can you connect the dots between innovation and the cumbersome process most of the market participants face when onboarding new business and clients? And so, Boaz, I'll kind of point to you on this one. Your thoughts, please.
Yeah. So if we talk about securities finance, especially securities lending, we know how hard it is to onboard new clients into the existing ecosystem, right? In terms of into tri-party accounts, into new borrowers, i.e. big banks. And we've been working on a few initiatives, but also we like to look at more holistically, right? And I think ISLA has done, this year has done really from a what we call industry standard agreement perspective, is that a step change while introducing the closed library and trying to digitalize the GMSLA. I think that's definitely a good step in the right direction. So we can't have an industry standard agreement which each bank has probably 10 different 10 if not more 10 different versions of it, right? So if you can standardize that, that's a big barrier to entry that you break down. Secondly, in terms of what we've seen all the time, and our view is that we need to have some sort of a shared repository of KYC, right? You've got the Swift KYC and the likes, but if you think about it a bit more holistically, right? Through distributed ledger, you can have a proper AML and KYC on an LEI base per client, right? You create a shared repository for the securities finance, like what Credit Benchmark did, in terms of credit score, right? You add on top of that the best of breed. You add the credit benchmarks of this world, and then you create one big, what I call onboarding repository that all of this industry can benefit from, right? And if one has done the job, then others can benefit from, right? So up until now, it's been very cagey, and everybody has tried to do that, thinking that there's actual advantage in doing that separately and siloed. But we think that if you can actually create that repository, and we've started working on it, and we're happy to share resources with others, that will be a step change in the industry, right? Because then it shouldn't be, if you think about today, right, you can open a bank account, right, in 5 minutes, right, at best. And I'm not just talking about Revolut, right? Bank, Chase, JP Morgan Chase opened a new bank in the UK. I opened an account there just because I'm a sucker for user experience. It took me 5 minutes. Right? If I can open a bank account with JP Morgan Chase in the UK, fully digital, in less than 5 minutes, it shouldn't be the case that actually a financial institution trading with Goldman Sachs on a securities lending basis would take to onboard 6 to 9 months. It shouldn't, and whatever people say, it shouldn't be, whatever the reasoning is, it's probably was good for 10 years ago. It's not relevant right now.
Yeah, I certainly kind of hear you on that one. Alyssa, from a slightly different perspective, as you think about, introducing kind of institutions to the new technology and onboarding them to the platform, does this resonate with you that it is cumbersome, takes time, or do you think that it's just a much slicker process?
Well, I think that there's two points there. Obviously, we do have to comply because we deal with regulated entities with major and well-established policies and procedures. So there's this connectivity to that existing world today, and which we obviously as a service provider need to respect and fulfill all of that framework as well as we can, and as well our customers expect us to do. If we look at it from another perspective, on the capacity to make our customers adopt new technology through a provider such as ourselves, I think that the approach that we've taken with our operating model is to really try to couple the advantages of the new technology and the existing legal and operational framework to allow our customers to bridge the two worlds, the new digital environment and the traditional custody and tri-party environments together, without actually having to do a sort of a big bang approach, and which has made it easier for our customers to join that digital journey. But I think that we are obviously within the framework of where our customers exist today. We are obliged to follow some of the existing AML, KYC, onboarding, vendor procurement processes that are quite cumbersome and long. But we're getting there. We call this, maybe from a digital acceptation perspective, taking baby steps. So allowing our customers to, adopt step by step, the new model, and try to make it as seamless as possible for them to join.
Great, thank you. Another question, and this is for you, Shane, actually. So typically we see change in our markets around reg imperatives. Without that push, how do you see the market embracing these changes, and what will be the incentive?
Yeah, it's a great question. Like, I think the reg implications in the marketplace are massive, and I think there's we've obviously faced SFTR for the last 2 or 3 years, which is now live, but there's obviously a huge one around the corner from a CSDR perspective. And the regs that issues that come with that specific piece of regulation, you have to be innovative. You have to start thinking from a technology perspective. How are you going to improve your settlement ratios, your SSIs, et cetera, et cetera? And look, obviously, there's a ton of vendors in the post-trade world. We have a successful partnership with Pyram, and what they're delivering from a TRM perspective is really fantastic. And we've expanded our footprint to help the marketplace from a front office perspective, try and help solve some of the CSDR penalties implications that are going to happen from that particular piece of reg. So I think that the regulations are moving the market forward in a place that requires technology to help, because the infrastructures at the institutions currently aren't at the right pace, aren't at the right development stage to circumvent and obviously navigate the regs that are coming down the pipe. So I think that the regulation environment has already started to transform securities finance business, whether that's around LCR, GSIP, NSFR, etc. And I think that dynamic is going to change and continue to evolve. But I think the next one for the next 12 months to 18 months is going to be CSDR. And I think that reg is going to really impact our industry in a way that is going to transform it fundamentally, similar to Reg Show in the US.
Nadine, thank you, Shane. And Nadine, do you have any additional thoughts on that question?
I do. Shane is absolutely right. I mean, a lot of our innovation over this past decade, I'd say after the big financial crisis, has been driven by innovation. Matt, you and I are both testimony to both of us dropping our global markets responsibilities, and the first time, at least in the history of State Street, and I'm assuming in yours as well, that it is technology that's driving innovation. And to a certain extent, we do understand how disruptive and how pervasive it's going to be on our business model, which was the comments made earlier. So at least in our model, and I suspect with most custodian banks and some of the larger investment banks, you're seeing innovation being driven out of what we're seeing these new technologies can bring to the table, and fully knowing well how impactful it's going to be on our business model. So in addition to all the regulatory changes that are propelling change, for once, at least during my tenure and what I've been doing, I'm seeing the view of the future, the ability of building a different global markets, a different capital markets environment that's being pushed by the promise of digital assets, the promise of DLT, tokenization, smart contracts, all coming together to build a new world. And for me, that's the most exciting part, because I promise you, I've had enough of building new products for regulations for the past 10 years. It's obviously something we have to do, and we've done it well, but it is nice for a change to take a blank sheet of paper and really figure out where all these, and then working in partnership with a lot of that new fintechs that are coming out, that also have really good solutions, whether it is for onboarding or in the case of both of your firms on doing things differently. So I think for once, innovation within the banking world is being driven for all the right reasons and not being mandated by regulation. So I mean, Matt, I don't know if you feel that way, but
I would actually concur with that. I think certainly from our perspective, you've got the kind of the risk profile kind of dynamics that we've talked about, plus just the commercial opportunities which you've touched on as well. So I think you're absolutely right, and the innovation is pointing us in a direction that actually kind of does that in a much more kind of advantageous way. Which actually leads me nicely onto the next question I actually had. So I guess in a kind of rapidly changing market, being small and nimble, and to your point about kind of onboarding vendors, I know Matt and yourself, obviously, big investors in companies, it is advantageous share gain. We match obviously two very good examples of that and have grown, quite materially. But with so much investment actually coming into this kind of sector, and I guess valuations, skyrocketing, how do you actually decipher where you want to deploy capital? So I guess kind of accelerate your kind of, strategic objectives in the securities finance, repo, and other places. So I'll start with Matt, actually.
I think it's a really great question, and it's something that we struggle with in terms of like discussion internally, and it takes a very significant amount of sort of like knowledge of where we've come from, the development of markets to date, and like a future view of where markets are going. To have a perspective on that and to think about like where different solutions and where different companies or technologies, et cetera, are going to make a difference in the future. And that's something that I think is um, sitting more in like a Silicon Valley seat these days than a Wall Street seat. It is something that's like not always as appreciated as I think it should be. And really understanding the evolution, like the texture of like why things have changed, how much is driven for regulatory reactionism versus like an actual like solution for a market problem. And so I think as purchasers of technology and developers of technology, you really want to take a step back and think about, like in that context, what is it you're trying to achieve? And how do these different companies, these different examples of technology help you achieve that goal? And I really don't think you can lose the context of history and where you're wanting to go there. Obviously, we're fortunate to be talking to several, at least 3 panelists who are doing exactly that outside of the traditional space. So it's fantastic.
Yeah, good. And I was going to ask Nadine the same question, but she seems to have just vanished momentarily. So next question, which I think for Shane and Boaz, which I think is really interesting, actually. So are firms slowing down innovation as they're worried about DLT-related innovation? I think kind of a bit of a mixture there, but I get the point. So Shane, I'll start with you on that one.
So do I think they're slowing down innovation? No. I think that firms over the last decade have had to evolve and have had to do more with less. But I think also that the industry, from a securities finance perspective, I still think it's a little bit in the dark ages. I think from a technology perspective, if I'm being brutally honest, there's been a monopoly in this space for close on 2 decades from a front office perspective. And I think that, if I look at other aspects of the equity division as an example, and perhaps other aspects of the fixed income world, I feel that they're more advanced. And I think that the securities finance space has been left in a little bit of the dark ages. And I think it's now that we're starting to now evolve and understand that innovation is key for the success of the business. And I also believe that the firms that are going to be at the forefront of that, because if I look at the market dynamics now, spreads are extremely thin across the marketplace, and I think the only way that you can really gain alpha and revenue and generate is to be innovative, whether that's reducing costs within the footprint of the platform by optimizing most efficiently. But I don't think innovation has stopped. Do I think DLT is going to be transformative for the industry as a whole? Absolutely, and I think certainly from a collateral transformation perspective, the tokenization, it's obviously there. It's already there with Elisa and the HQLX guys, and it's very clear that is going to continue. But I think innovation, if you want to be successful in this business from a prime agency lending perspective, you have to evolve, and if you don't do it, you'll be left behind.
Boaz, anything you'd add to that?
Yeah, just a quick, maybe a quick supplement to what Shane said, and I totally agree with him. At the end of the day, I think big banks have come to the recognition that formerly it was all about buy or build, right? And nobody wanted to introduce new technologies or new companies into your core, right? But I think now the buy or build have totally opened up, and I think the fact that digital assets like you, like with Nadine, it's a recognition that new technologies are coming in. We need to keep pace, and the fact that investing in companies, it's not just necessarily because of a great product, right? What you gain, and we've seen it with Citi, with our big collaboration with Citi, is that you gain a product partner to a journey, right? You get a product partner to actually help you do things that you don't do well. Banks do manage risk well. They have capital. They know how to. They know they do a lot. They're great credit intermediaries. All of these things they do really well. But for instance, and I'll say it again, and I don't want everybody just to think about a button in the screen, but banks are not good in thinking about user experience. They're just not good at it, right? And they haven't focused on it. And if you're nimble and a small company like ShareGain, like WeMatch, like HQLX, it's all about, and especially like Coinbase, you're obsessed by client experience, right? And when you have a great user experience, not just about client, all of the stakeholders, you drive wider adoption. You drive wider adoptions, volume go up, and everything else. So good things happen. So I think banks have come into a recognition that we need to complement our thinking with the right people that will help us find a new solution, and also being humbled. That fintechs can actually move faster, quicker, build prototypes, fail quickly, and learn from that, and come with a much more mature market than going on a 3-year project and finding out that when you've done that 3-year project, double the budget and double the time, it's a bit obsolete.
Yeah, and I think that's a really great point that Boaz has brought up there, Matt. I think at large institutions, when you want technology delivered, it's like moving an oil tanker. And it takes forever to get stuff done, let's be honest. And I think for ShareGain, HQLX, Coinbase, and WeMatch, we're agile, we're quick, we can deliver stuff really efficiently and effectively. And we are saving our customers hours and hours through the efficiencies and the technology that we're delivering to them. If you don't embrace that, then you're doing a disservice to your company and obviously to your shareholders. So I think that the oil tanker versus the agility is massive, and we're able to deploy the technology in a very, very quick fashion.
Yeah, no, I actually would completely concur with that, and I think it goes back to one of my earlier questions when I talked about being, small and nimble. And I actually co-hosted something yesterday with some of Matt's colleagues in London, and it's fascinating to see that ability, and you guys are the same, to develop products and respond to the market in a way that just, the big organizations understandably just can't. And so, the question around investment and being able to kind of accelerate your strategic objectives, from the perspective of, say, my team and Nadine's, that's why I thought that question was quite pertinent as well, because, Nadine didn't get the chance to answer, so she dropped off. So, maybe we just touch on that, Nadine, as you think about precisely that, trying to be nimble in this marketplace, and just given the ever escalating kind of valuations, how do you kind of weigh out where you want to deploy capital to facilitate?
Sorry, Matt, I couldn't hear you really well, but
oh, sorry.
I don't know.
Long and short of it is, in a market where the small kind of, vendors, the small technology firms are just so nimble, can actually be just very innovative in terms of, product evolution, a little bit harder for the larger organizations. As you've obviously invested capital in companies, how do you think about how to deploy, particularly with kind of costs, of investment just escalating a little bit? There's obviously kind of a way out, you have to weigh the benefits, but that ability to be nimble is just hugely important.
Absolutely, and I think Boaz hit it on the nail, right? Like banks historically, had to manufacture everything, including the pencils that we use, and there's been a massive shift in thinking. And I've been on record saying, as we set up our new digital division, that if we don't write one line of code, we'd have succeeded. My attention is going to be a lot more about trying to bridge the old and the new versus try to move into a space where the fintechs have developed. So for me, fintechs are really allies and will enable our digital transformation. Matt, we have a roadmap. We know exactly what we want to accomplish, and where we've been putting capital is definitely in firms that are going to help us execute on that strategy. So it's a fairly disciplined process, and I agree with Shane. It takes us forever to get anything done, and part of innovation is less technology and more culture. And we are trying to promote within State Street Digital, at least, is trying to get our proof of concepts done within 100 days, right? And we take a look, we put a hypothesis out there. If we're hitting our hypotheses, then we persist. If we're not, we pivot. But we use the knowledge, we use the entrepreneurial spirit that fintech companies and our partners bring to the table. So we leverage them for their know-how, we leverage them for their technology, hopefully in exchange, they're getting scale with us, they're getting data, they're getting clients and a global footprint. So it is a nice win-win. But we're not investing for the sake of investing. We invest to accelerate our strategic roadmap.
And I had a couple of quick fire questions. There's a couple more actually I might come back to if we've got time. But I mean, I'll start, Alyssa, with you. I mean, what do you think will be the biggest transformation over the next 12 months? And I'll ask each and every one just from your own perspective in terms of,
you're addressing that to me. I definitely see we're going to see, at least within the banks, a bigger adoption of digital across the board. I think we're going to start to introduce, we're going to stop talking and start to introduce real products. And I would see a mass adoption of DLT and as well as tokenization. But it's got to start with two triggers. One is better clarity on CBDCs. And the second one, a much easier, a clearer roadmap, not a harmonized regulatory roadmap, just a bit more clarity. But I think we're gonna move in that direction sooner than later. So I'm excited for that.
Great, Alyssa, same question.
Yeah, sure. Yeah, so for the next 12 months, I think that we'll be keeping our laser focus on European market and obviously bringing more volumes onto the platform. Interoperability will be key for us, whether it would be adding new asset classes or new business cases onto our suite of services. And for this, it's really important for us to interoperate with the other fintech platforms. And we are also, why that interoperability is very key for us. We're being very cautious of replicating the fragmentations of the past that we're actually trying to solve with our product. So that interoperability is something that should help us to avoid a siloed ecosystem of different DLT platforms across the securities finance ecosystem. For the 12 months to come, obviously our base product of upgrade-downgrade transactions remains extremely important to us and to our customers. But we're also excited to pursue other avenues in the collateral management space. As an example, variation margin use case that we're working on to build with buy-side entities. And probably in the next 12 months, we'll be looking on how to bring the P of DVP onto our platform, i.e. how to best integrate cash onto HQLAX, whether it would be with the collaboration with other fintechs in that space. So yes, we're looking towards to a very busy 12 months to come.
Fantastic. Yeah, makes a lot of sense. Matt, from your side perspective?
It's a really tough one. I feel like whatever the biggest transformation over the next 12 months is already happened like 6 months ago somewhere, because that's how long it takes for a big transformation to actually occur.
Yeah.
I mean, I think for me, the fundamental thing that we're dealing with at a broad level right now is the Federal Reserve System being broken. The fact that there's $1.4 trillion chasing 5 basis points of return in the reverse repo window, just like points to the US dollar as a reserve currency is a screwed up market. And so what we're going to continue to see is how the world works around that, and how that starts to really impact collateral markets, securities markets, financing markets, etc.
Very good point. Boaz? Same question.
From our point of view, we're very much, I don't like predictions as a whole, but I think that, what we're looking at, we're working on 4 different projects with new clients coming on board, and 3 of them are effectively, again, new participants, what we call the neobanks, neo-brokers coming into the market. We're seeing more and more coming in and knocking on our door, right? If we were chasing them a few years back saying, guys, you're missing a trick. This is, you can't do just free share trading all the time. Right? You need to start thinking about how you monetize your business model. And securities lending is one of the best ways to do it. Now we're seeing everybody's coming, flipping, and I think that that notion or that ship has really sailed, and we are now in a place that they're coming in and understanding how can you help us. So we're thinking about big big entrants and big new participants coming into the securities lending market, and they will change the market, because what they have, in essence, what they want is more technology, better user experience, and what they bring in return is specials, deep specials, and the most lucrative stuff on the market, right? So then you get more lucrative supply that enables banks to actually, and hedge funds and everything else to actually deploy more strategies, and the network effect becomes very strong, right?
Absolutely. And Shane, same question.
Yeah, look, I think judging from conversations in the marketplace and listening yesterday to the Legends panel session, I think it's very clear that the things that are going to impact specifically the securities finance space for the next 12 months are ESG and CSDR. That was the common theme yesterday that was raised. And I think from a technology perspective, as I discussed earlier, we need to come up with solutions to work through that. So, for example, the ESG topic is obviously widespread within the industry and within the society in general. And we have built, technology WeMatch that helps from a synthetic perspective allow customers to opine, deal with their ESG requirements. So we are at that innovative stage of allowing customers to transact on that. But that theme is going to, in my opinion, really start to gather momentum as people look at ethical lists, as people look at whether they're prepared to lend stock, take collateral in certain names, et cetera, depending on their ESG score in the marketplace. And I think CSDR, as I said earlier, is going to be transformative. I think that is going to change liquidity profiles. Does it mean risk averseness from some of the agent lenders in the marketplace and the beneficial owners? Will they be prepared to take risk on their portfolio? How will trading desks deal with the penalties and fines and potential implications from that perspective on a reputational basis? Also along the lines of the costs associated with that. I think those things are huge. And I think if I speak openly, I think as an industry, we didn't do a fantastic job on SFTR. And I think CSDR is only 17 weeks away. And when I think about that, I get slightly worried as an industry that we're not prepared as we should be.
Great. Look, I'd just like to say a special thank you to all the panelists for their invaluable insights, and over to Andy. Thank you, everybody.